Let's continue our opening bell coverage. I'm John Ehrlichman sitting in on this Friday morning. And one thing you can say about the stock market this year in the face of uncertainty is it has been resilient. At least if you're looking at the headline numbers for the benchmark indexes, whether it's the TSX or whether it's the S&P 500, which is still pretty close to record highs. But what would be the catalysts for more gains? Let's bring in Rick Gardner, who's Chief Investment Officer at RGA Investments and has been thinking a lot about some of the considerations for that. Rick, it's nice to have you with us. And first of all, I mean, on average, before we get into some of your considerations here, do you think there is the possibility that the market could continue to climb?
Yeah, absolutely. I think if you look at where we were at the start of this year, our feeling coming into this year was we would have predictable unpredictability, and that would cause a lot of volatility in the markets, and that's exactly what we've seen. But we're coming to a really interesting inflection point right now. We're coming up on halfway through the first year. A lot of the questions and uncertainties that we were maybe anticipating and some that we weren't are now in full view. And what's interesting, if you look at the timeline around a lot of these items, whether it's what's going on right now with Iran and Israel, the pause on the tariffs from the United States, and the reconciliation package that's working its way through the House and Senate, all of those things are coming to a head kind of in the month of July. So that should provide an opportunity for some clarity, which the market tends to like. But what that clarity is and what those decisions end up being will have a big impact on whether the volatility rises or falls. So it could present a really good opportunity for investing depending on which way some of these different chips fall.
Okay, helpful context there. So break down these catalysts that could determine where the chips fall, as you say. I think you sort of alluded to some of them there, but maybe break down how you're looking at it.
Yeah, I think the big one right now, when it comes to the trade deals, it would be very beneficial to see more improvement with China. Obviously, we are working in the right direction there right now, and our markets seem to indicate that. But that's a big one. As far as some of the other players around the world, it would also be nice to get some input from them as well, and hopefully get another trade deal or two. That's very big. And I think you'll see the markets respond very positively to that.
Okay, and then we had a board up beyond that one. I know everybody's talking about the big, beautiful bill, but the specific extension of those U.S. tax cuts going back 5 or 6 years, you're also watching that.
Yes, that is huge. If that does not, if the tax code is not extended, we will see the largest tax increase basically in American history by going back to where we were before that. So that will have a huge impact on the economy. So it is very important. It's it seems like here we get a lot of this type of posturing. There's a lot of movement, a lot of disagreement, and it goes right up till the end, and then we have something pass. So it's very hard to predict. And that could create opportunities for the investor here. As the ebb and flow of that bill passage comes to fruition, there could be pullbacks with the market. There could be rapid increases up. It creates opportunity. And so it's important for investors to be aware of that and be ready to move. And
then the third thing on your list was the prospect for Fed rate cuts. I mean, obviously this week, the U.S. Federal Reserve was pushing people off the idea that that's something that is imminent. And obviously we're watching what happens with rate cuts in this country as well. But how are you thinking about what that could mean for stocks?
Yeah, I think when it comes to the Fed rate cut, it's really interesting the dynamic that's developed there. We've got, from a political standpoint, the administration is very critical of the Fed's policy on interest rates. And in the Fed meeting earlier this week, they seemed to indicate all of their concerns were around trade policy. And so both sides are talking to the other side about the uncertainty that's there. However, when you look at the data, the inflation data doesn't really support rates staying where they are. So I would hope that we would see rate decreases as we get into the second half of the year. Only time will tell. But if that were to happen, coupled with some of the clarity that we were talking about that could be coming on those other two issues, I think that would be very bullish for the markets.
Okay, so we'll watch what happens on trade and with tax cuts and with rate cuts. And then in terms of how you would be actionable around those things, if you will, some of the sector ideas you shared with us were AI and robotics, cybersecurity, military and aerospace. So it sounds like you're playing into growth through technology and just growth through the way actually that technology is influencing all these geopolitical issues too.
Yeah, I think you hit the nail on the head there. That's exactly how I'm looking at it. And I think it's really important right now for investors not to miss the forest for the trees. We've got a lot of things, the things that we just discussed, that are causing volatility. However, if you take a step back and look at where innovation and demand is right now, it's a very, very bright picture when it comes to artificial intelligence, and then also the cybersecurity space because of the implementation of that artificial intelligence, and also on the aerospace and defense sector. So if you can kind of get past the noise and look at what's on the other side of it, there's a lot of opportunity for that, for those sectors. And I think it's a great idea if that volatility presents itself due to temporary things that are happening. It's a great time to be buying into those sectors.
All right.